David Riedel is founder of Riedel Research Group, is here to give us his take on the Indian markets in our best-in-class segment. David, nice to see you. Thanks for coming on. Right before this segment, I was looking at the Bombay Sensex Index, doubled in value over the last 12 months. Are these stocks still set to outperform? Can they keep up this pace?
Well, I don't think they can keep up this pace, but I think that Mr. Mobius is onto something here. India is very well positioned to continue to grow. Obviously, a huge population, a lot of low-hanging fruit in terms of productivity enhancements. They do have their headwinds, though, so I don't think it's a given that they're going to be the strongest market in the world. But I think longer term, they're going to be a good performer.
And the headwinds being something along the lines of inflation problems, right?
That's exactly right. Food price inflation is huge for them. Food price inflation in India today is 17%, and that's very painful for an emerging economy like this to have that kind of burden on their household expenditures. The stocks are not cheap at about 15.5 times. Compared with China and Brazil, they're a little bit more expensive or pretty much in line with some of those markets. But this food price inflation issue is really something that the Indians have to get control of.
Well, are they getting control of it?
Unfortunately, this is where being a democracy kind of hurts in some ways. They're not able to put through the massive stimulus programs or infrastructure investment programs that you see in a China or even in a Brazil. A lot of things get bogged down with weighing the interests of different constituencies, be they voters or farmers or urban residents. And so they are trying to do a lot of things, and the most recent budget was very friendly to investment in agribusiness and in the rural infrastructure.
Right.
But it's still a tough row to hoe.
Speaking about that budget, you've got some recommendations on what companies, right, that you would invest in based on what the budget, I guess what they're allocating, what funds and what sectors are they allocating funds to?
That's right. Interestingly, the budget was very unfriendly to petroleum, energy, oil, and gas kind of companies. So you want to stay away from the Reliance Industries and those kinds of companies right now. But you do want to invest in automotive, consumer, and financial. And U.S. investors can use ADRs of Tata Motors, ticker TTM, ICICI Bank, IBN, HDFC Bank also has an ADR. So a number of different ways that you can play banking, consumer, autos, and participate alongside the strong growth in India.
But David, even if you get into those companies and you get into them at good prices, don't you need to have kind of a pretty steel stomach? Because aren't we looking at volatility, a lot of volatility for emerging market stocks like these?
These are sort of some of the largest bellwether stocks. They won't be as volatile as some of the smaller mid-cap names. You're quite right that you have to stomach some volatility, but volatility cuts both ways. You have to have a strong stomach, but you can get those returns. You just have to make sure that you're demanding the right kinds of returns for the risk that you're taking. I think these are good bets.
Okay. All right, David, we're going to have to leave it there, but thanks so much for joining us.